You might think the value is building on this trade, and it is. Depending upon your value line, of course, it might well be building. But obviously, in that type of trade narrative, you've got to give yourself space, because if you're trading things like bonds, that's just a parallel shift, guys. Now, we know that parallel shifts come to an end, but we know that instead of buying this here or buying this here or buying this here, this thing could keep going significantly. So you've got to give yourself that extra space to take advantage of what is building in terms of what that value line is. You've got to give yourself the extra wiggle room to make sure that the story that you're trying to trade is indeed a story in the first place. It really has to improve. So when the value line starts to improve, you can start to take part. Now, you can obviously use, if you're using the curve, that can be quite difficult, because most of the time the curve goes flat and then we get this kind of parallel shifting phase. That's obviously not the same, because you're not using the same part of the curve as the price, in which case it definitely is a parallel shift. If you're using the fight against the UB contract or the ZB contract, that's slightly different. Slightly different. So obviously what we've got to try and do is just make sure we give ourselves that space to breathe, let the stops, get the liquidity levels, and then punch right into that trade for what you ultimately think is going to be a nice outcome from that value narrative. But you've got to give yourself space. So when I look at oil, when I look at the bond at the top edge, we can see that if the oil's what we're using, you can see the oil line is dropping. It's not a related value line. It's completely separate. It's completely independent. So as oil starts to drop here, I'm starting to think to myself, right, I can sell into this narrative. Wholesale price is right above me. Let's do some business on the bond into that, what obviously is lining up there. What else would be perfect? Well, of course, the simplified version. We're trying to figure out whether the blue line is starting to drop. Well, the blue line hasn't rallied since this point on the charts here, guys. Since this point in the chart here, the blue line hasn't rallied. But that puts you into a parallel shift. So you've got to give this a bit of room. You've got to give it a bit of space. Now, how would it start evolving? Well, the blue line needs to drop. So we wait for the blue line to drop. We try and make sure that the only time we sell is when the blue line drops. Well, that would have meant you could have sold, obviously, here, but that's a little bit too soon, because this is a parallel shift. I need to put value into this, guys. We could have sold here, but that still looks like a parallel shift. The blue line on a net basis is actually slightly higher. We could have sold here. Now, that would be valid, because the blue line is now net lower on an evens basis, right? So we could go from the blue line here to the blue line here. It is lower. So that is a reasonable opportunity to start selling. And sure enough, you were able to take a scratch trade plus a profit out of that bit of business just there. Now, obviously, what else would we add? Well, we want to make sure there's supply coming in of 10-year notes. So how do we know what the supply coming in? Red over blue. So the red line you can see at that stage is higher than the declining blue line. So you can see that red is over blue. So therefore, selling into that makes perfect sense. And sure enough, the same is true at higher prices. The red is the same, the blue is the same, and obviously all we've got to try and do is capture the trade narrative as it comes away. Now, when it comes back up, it's not as good a trade. We lose the blue line and we lose the red line, at least in that one candle basis. But on a macro scale, it's still the trade. If I take you out from the 1-minute chart to the 5-minute chart, you'll start to recognize that that sell really is starting to show up in that narrative right there. Red and blue don't seem to be much different at higher prices again here. So at that stage, it's just the fact that they're not dropping to give us the perfect sell. But nonetheless, I still think it's a good enough trade. I don't think it's a great trade. I think it's a good enough trade. And certainly with the inflation break-evens giving us a strong signal, it's certainly good enough for this price to certainly be retesting back into the level that we've just dealt from, which is obviously this key level here. So if it was you, if you were in looking to do business here, I would be taking some monies and hoping that we see a little bit more from the curve. You know, holding on to your short positions and just waiting to see what happens with this curve. If the curve balances on the wrong side, we start kind of taking a little bit more profits off and we close off more business. But the curve really needs to pick up a bit of urgency here. I think the curve absolutely needs to build a bit of urgency here if we're going to get much more than this 174 level, guys. And for that reason, I'm not going to be too shy about taking my monies off around about this area here. Make sense? Makes sense.